All right, let's go ahead and get started. What does that sound, by the way? The volume for the speakers, silly. All right. Well, we're not going to play anything over the speakers, so hopefully that won't affect my recording. All right, so before we start on today's discussion, just a reminder, we're doing Ultrix Part 2 coming up on Friday. The assignment that we're going to be working on, it's basically going to be partially walkthrough in class, and then partially you'll be doing the assignment on your own. Preceding that, we will have a quiz, our next quiz. I don't remember what quiz number it is. It's that point in the semester that I'm starting to forget everything. Just to reflect, it's been several weeks that we had a quiz. I believe we did not have a quiz in week 8 or week 9, so we're in week 10. So we'll be covering the stuff from week 8 and week 9, as well as the stuff in the first Ultrix assignment. I guess the good news is that if you feel uncomfortable about one particular area, there's likely only to be one question from that area. But there are a lot of things that you have to cover, so make sure you review that. I tried to keep it fairly low-hanging fruit, though depending on where the discussion goes, we'll see. Maybe I'll make it really, really high-hanging fruit and no, I won't do that. I won't. I threaten that, and then it's always meant as a joke, and then I get these terrified looks in students' eyes. It's just like, no, yeah, I'm not doing that. It's more of a feint, more of a bluff.
Still just 5 questions.
Yeah, still just 5 questions, 15 points, same context. All right. So as far as the concepts that we're going to be discussing over the next 5 weeks, so this week and then the remaining, I guess the remaining 4 weeks after this. But remember, week 15, we're going to have our presentations. Also, have I set that up? Now I'm just curious. Yeah, I've also provided a link for research project presentation signups. So yeah, 17 people in the class, which means that we'll have 6 people each day, except for one day, which will be Friday, will be 5 people. That is first come, first serve, though. If you do have a particular day that you just can't present because you won't be available, first of all, try to get that day, or try not to sign up for that day, I guess I should say. Try to get one of the other days. If it comes down to it where everybody else has taken the day and then you just weren't quick enough to sign up for it, but you do need to present on that day, we'll work something out. I don't think that these 6 presentations will take the entire class session. If you do the math, they're three-minute presentations followed by a few questions. So 3 minutes times 6 people is 18 minutes, which I anticipate it will take longer than that, but still. Yeah. Okay. So just for context on that. Anyway, as I was saying, the concepts that we're going to be talking about this week and next week are a little bit dry. We're going to be talking about data governance this week, and we're talking about cloud computing next week. I think it gets more interesting from there when we start talking about cryptocurrency and then AI in the last few weeks. That being said, part of the reason that I covered the concepts on data governance and cloud computing is this is information that's covered on multiple sections of the CPA exam, and my expectation is most people in the room will be sitting for the CPA exam. So I'm trying to be pretty consistent on making sure that we cover things that are important. It may or may not be relevant, but it's always good detail to have. It's good information to cover. So I thought this is a good discussion to have, if not necessarily an interesting discussion at most points. Some of it's pretty dry, but I do like this first question because this first question talks about data as an asset, and it comes directly from this idea of the article. This is a little bit older article. It's like 6 years old, but it's from the CPA Journal, and it's titled "Managing Data as an Asset." Now, that has some pretty strong implications associated with it. If you say managing data as an asset, the implication is data is actually an asset. The problem is that I don't know how true that statement is. So I had you all take a position on this one. I said, okay, you had to defend both statements because dissoi logoi, remember that from auditing where you had to be able to argue both sides of a position. By the way, just as a good piece of advice, that's just good life advice to be able to argue both sides of a position. I think far too few people in this world are capable of doing that. They're very, very strong on confirmation bias and not able to acknowledge points of view other than their own. And I'm not trying to tell you how to live your life. I'm just saying I think the world would be better off if more people could actually acknowledge multiple points of view rather than kind of steadfastly sticking to their own. But I'm not I'm not here to try to solve all the world's problems. I'm just try to teach you about AIS. So we're going to do that. We're going to talk about data, and I'm going to do my little bit to encourage this rhetorical exercise by having you defend both statements. And then I said, which statement do you personally support? Which may or may not be a fiasco because there may have been some differences of opinion within the groups themselves. So we'll go ahead and get to that when we get to that. But let's start out. Let's talk about the following statement. And I think this more straightforward of the two is going to be the idea that data is an asset. Now, Joe, you think I'm giving you the easy question, but this is not as easy as it sounds. But I do think I have confidence in you and your group to be able to defend this statement. So what was your defense for the fact that data is an asset?
Well, we said the definition of an asset is something that has future economic value. And much like any other assets, data can be purchased, produced, improved, or sold. Intangibility of data does not prevent its classification as an asset. Trademarks are commonly accepted as intangible assets.
Yes. And I do think that's a great definition. I think opting to the accounting definitions, especially saying that it's a resource that it has future economic value, that's a very good approach. We do need to be careful about the idea of an intangible asset because it does not meet the definition of how we would consider intangible assets, because intangible assets are owned by the organization, which is certainly problematic if we talk about data. But other characteristics do have relevance there. So let's go ahead and let's say that data is an intangible item that has characteristics of intangible assets. Is it fair to say something like that? Or does anybody really want to argue for the intangible assets? Because I'll go fetch Dr. Eisen right now if we want to have this argument. I personally believe intangible assets don't actually exist, but that's an argument for a different class session. If we're going to say that it's got intangible characteristics, I think there's an argument there. The ownership issue is a little bit problematic, and I think that's kind of the compelling argument for the other side. So, but otherwise, I do think it's a good definition. My definition was very consistent with that, is that it's resources that help organizations generate revenue and provide competitive advantages. That's how we view accounting assets from an accounting perspective. Now, real quick, do we have multiple definitions for how we look at assets from an accounting perspective? Yes, we do. Okay, so that's not the only way we can look at it, and that's really important to distinguish when we start talking about why it's not an asset. But I do think using that definition, which is a very intuitive definition, is a good one. So, yeah, strong arguments. I also think the conversion mechanism is a really important point to make, and we'll get to that here in just a second. All right, so now we have the argument that data is not an asset, and Joe came up with a really strong argument, so you're gonna have to counter that with a strong argument of your own. So what did your group come up with?
He said data is essentially just raw information and organized and written out. Once again, like in an accounting context, you generally do not classify like just information as an asset, other than something like a patent. Data is hard to quantify in terms of value, or also maybe of little to no value unless that data is.
Right. So data has the potential for value, but data itself just does not really have the value. Now, there's a little bit of a compelling deterrent to that. I think we could make the argument that data does have some inherent value, but the generation of value is usually from data is usually viewed as how we actually can convert that to information, because data itself on its own is just not going to be completely relevant to decision making. And then the argument about whether or not it meets the accounting definition, it is intangible. It's an intangible item. It doesn't really kind of fall under the item or the definition that we would say for intangible asset or just asset in general. I think there's also an important point that I alluded to. When we talk about data, who has ownership of the data? Now, keep in mind, ownership is different from custody, okay? If we're talking about custody of the data, it falls under the idea of other assets, because we think of an asset as something that we physically possess or we have legitimate possession of. But is an organization that possesses data, do they have ownership of that data? So the details that you provide on your social media accounts, can we say that that's data? Those are data points. Okay, you provide those to the social media accounts, and they have ownership of it, or they have custody of it, I should say. See, I'm getting confused now. They have custody of it. Do they own that data? No. So, like, if they find out what your social security number is, can they use that social security number to set up accounts and like get a mortgage for themselves and stuff like that? They could. That's called fraud. Okay, so the idea that ownership of data is a really important one. There's another one that I want to allude to, and this is kind of a narrow perspective, but I do think this is an important perspective because Joe made a very compelling argument with respect to the accounting definition of data, asset, excuse me, accounting definition of an asset. Another accounting definition of asset that I really like that I don't think it's utilized effectively is the idea that an asset is an unexpired cost. Has anybody ever heard that terminology before? It's one of those ones that I think gets used a lot in research, but it doesn't get used a lot in practice. But it makes sense if you think about what an asset is. So if we call it asset as an unexpired cost, what would be an expired cost? I'll give you a hint. It's another category of accounting classification. Expenses, yes, okay. So the idea being is that assets are just expenses before they become expenses. Now, is that a silly concept or is that relevant? Think about inventory, okay? When we sell inventory, does it become an expense? Yes, it becomes cost of goods sold. The cost of the inventory becomes cost of goods sold. So we're just basically transitioning an asset into an expense category. And I will argue that most assets have that representation. We can kind of look at it in different scenarios. That's an easy tractable one. But what about something like property, plant, and equipment? Does that get transitioned into an expense category? Yeah, if we're talking about equipment, that gets transitioned into depreciation. If we're talking about natural resources, it's depletion. If we're talking about certain types of other assets that are a little bit less useful, then we talk about amortization. And we can actually say, well, what about land, Dr. Barnes? So say, well, land is the exception to the rule. Land is certainly problematic. It's an asset, but it doesn't actually diminish in value, at least not directly diminish in value. We don't depreciate land. And has anybody ever depreciated land? Okay, good. Okay, we got her on the right basis in here. Now, does land still decline in value or does it have potential decline in value? Yes, we can impair land. We can actually write it down for impairment. So it does still meet that accounting definition. It's just not a systematic process. So our idea is that the value of an asset is going to decline over time. We're going to recognize that decline as a cost, as a direct cost. So it's an unexpired cost when it got full value, then it loses value, and that's going to be the expiration of the cost. Is that true for data? Does data have decline in value similar to that? I mean, we can say that some data is less valuable, but it doesn't get used up. Okay, if I say, all right, here's my asset, or here's my address, here's my address. Okay, here's my address. There's all these words that begin with letter A that I'm getting confused about. Here's my address. So if I provide that to somebody, does that when I use that in that particular context, does that mean I could never provide my address to somebody else ever again? No, I can use my address in a lot of different contexts. That piece of data is viable in a lot of different scenarios. Now, there is an argument that it does decline in value, but I think that's more about relevance and timeliness than about the value of the data itself. For example, if we're trying to make a determination of what's relevant in the year 2025, we probably want data from 2025, not data from 2015. But the data itself does not actually expire. It does not. There's no expiration of that particular item, so it doesn't transition from an unexpired cost to an expired cost, which is a little bit problematic if we're going to classify it as an asset because it doesn't meet that basic accounting definition. Now, again, I'm splitting hairs. You may say, Dr. Barnes, you're being very, very technical. And I say, this is the graduate program. That's what we're supposed to be, very, very technical. Okay, I want you to think about all sides of the argument. But in Joe and Jake's case, I think they both made compelling arguments for both sides. Okay, I think that's the case. So then we come down to what of the statements do you personally support? So I'm going to go through each of the groups and see which statements the group fully supported, and if there were any conflicts over that. Okay, so go back to Joe. Joe, what did your group support on this statement?
Supported data is an asset.
Oh, was it unanimous in that consent?
Yeah.
Okay. All right. Fair enough. All right. Jake, what did your group support? Okay, so if we're 2 for 2, was it unanimous in that one? You didn't have any outliers? Okay, all right. Andrew, what'd your group say? Unanimously? Okay, so not a lot of disparity here. All right, Clayton, what'd your group say? All right, so yeah, good accounting argument, and I think that's a fair argument in any scenario. Even if it's 100% scenario, 100% correct, it depends is always a valid answer. All right. So what was your argument for it depends?
Viewing, well, at least when I was I viewed it more in a lens of like not explicitly like set liability in terms of like paper accounting, but like whether it's something that would cause more benefit or more like loss for the company.
Mhm.
And so the reason we said it depends is because if the benefits of collecting of having the data, of having ownership and custody of the data outweighs the disadvantages of it, then you could classify it as an asset. But
Mhm.
if there's a lot of risk involved with owning or having to get the data, it may not be considered an asset in terms of the qualitative factors.
Okay, that's an interesting perspective, and it's consistent with the idea of data governance that we're going to talk about a little bit. I will say it's not a perspective that I think any previous group has said, so it's a good, valid analogy. It's something I think we tend to gloss over is that there are definitely costs associated with acquisition of assets. If we think about just acquisition of inventory, we've got to have resources and infrastructure in place to be able to manage that inventory. We've got to have people in receiving. We got to have a warehouse that could hold it. We've got to have the vehicles or pay for the vehicles to be able to transport that inventory. So a similar concept there, and there's a lot of interesting questions that could be broached. So, okay, good argument. If you just said it depends and then not being able to support that argument, I may have called you a task, but I do think that's a valid perspective. All right, Jack, what does your group say?
All three of us.
Okay, all right. Now, I want to give everybody grief because last semester when I argued about this, there was a lot of argument about it, and I don't know if they were just trying to be contentious for the point of being contentious. I guess it's good that we have some agreement and that we can come to a consensus on this. But I will agree. I do think that data is an asset for the most part, even if it doesn't necessarily meet the accounting definition, the second accounting definition. I do think that it has so much resemblance. Kind of the argument about the idea is that it's going to be a critical resource when transformed into something of value. So have we actually seen context for that about transforming something that has very little value into something that has value? Yeah, it happens all the time in cost accounting. Okay, you're all taking managerial seminar right now. That's the entire focus of that course. Is how do we transfer something that has minimal value into something that has a lot of value? Data itself, not a whole lot of relevance. You can't just look at a piece of data and say, "Oh, okay, that's going to be important," and especially with unorganized details. So yeah, the organization process is something that we can actually say is that transition to value. It is a conversion process, even though we don't necessarily consider it a conversion process. So that's I think that's the relevant takeaway from that. Okay, something that I get confused on is question number 2. What is the difference between data and information, and provide the accounting analogy to provide the difference? I kind of just already alluded to this. Is data is raw and untransformed, whereas information is transformed. It's basically what those crazy cost accountants do. Is they take it and they say, this is something that can be a resource. We can turn it into something that can be useful. It's basically a stack of lumber versus a table. Does the stack of lumber have value? I mean, maybe you could actually sell it to somebody else who would be able to make something use of it. You can make an argument if you're really tired and you want to take a nap, you can go take a nap on the stack of lumber. It might be more comfortable than sleeping on the ground. But for the most part, the stack of lumber by itself is not a whole lot of intrinsic value, other than what we could actually sell it to other people who could transition it. But if we could turn that into a table, that table does have intrinsic value. Okay, so that's kind of the argument with between data and information is something that we view as valuable. And again, something that I alluded to back in AIS, for those of you who remember, something I talked about in AIS is that data and information, we tend to want to separate those out. And sometimes I'm really bad about it. Sometimes I say information when I mean data and vice versa. But it's true that some data can be construed as information. Is the idea being is that we take a piece of data, we transform it, and it becomes information, but then somebody else transforms that information further. It's kind of like the process further decisions in that you talk about in managerial and cost accounting, is that certain types of data can be already existing information for others, but we can use it for further information and detail. In fact, a lot of you are doing that right now. You're taking detail for your projects, for your data analysis projects in this class, and you're saying, what additional detail can I construe from it? You're taking minimal amounts of detail, expanding those out to look at more detail, and then even some of you are taking it to put into AI queries and say, what can be construed from this, and go any further. So data is not necessarily one point in time, it's a continuum. So that's something to keep in mind as well. But going beyond kind of the philosophical review of data, let's go ahead and talk about the technical details that we want to get into. So in the CPA Journal article, the author state organizations should manage data in the same way they would manage an asset. So do you feel that this statement applies organizational mismanagement of data should be viewed as negligent or fraudulent in the same way that organizational mismanagement assets should be viewed? Now, admittedly, this is a leading question. Okay, this is a leading question, but I do think it's an important question to ask. So, Andrew, with my leading question, okay, unless you answer no, okay, what is the answer to this one? Okay.
Yes.
Okay, all right, all right. Want to make sure that we were consistent on that one. Obviously, I was leading towards a conclusion, but what was your justification on this? What was your group's justification?
We said that because it could be concept, use the concept in multiple different forms. That you're not the company tampering, or malicious activity when you validate, part or the entire data collection. And that would make it negligent, fraudulent.
Yeah, so even if we don't necessarily view this as a data from the traditional accounting perspective, it does have value, and that value could actually be used in a fraudulent manner. Now, I want to flip the script on you all. I want to kind of change things. Could we make an argument, and obviously you're going to say it depends, but could we make an argument that management of data should be treated more severely than mismanagement of traditional assets? It depends, Dr. Barnes. Yeah, I kind of lead you down that question. So why am I saying this? Why am I making this profound statement? Well, let's think about a traditional corporate environment, okay? A traditional corporate environment. So you have assets and you have data. Well, I'm a shareholder in this corporation. Am I acknowledging by buying shares in this organization that there's going to be a risk associated with my ownership? Yes, that is the whole purpose of this corporate forum. In fact, I was having a conversation with Professor Bergman, and the idea being is that the whole limited liability is so that basically you don't lose everything that you own. You basically are limited or restricted to what it is your investment is. But you could lose your entire investment if you all say, you know what, Dr. Barnes is right, investing early and often is great. I'm going to invest everything in this startup, and I'm going to make sure that I make $1 million by the time I'm 30. If you invest everything you own, you could possibly lose everything that you own. So you have to be very, very cognizant of that. But you are acknowledging that risk exists. Does that risk include fraud? We try to think that it doesn't, but it does to some degree. We do acknowledge that there is going to be some perspective in that. Now, if you are a victim of fraud, usually what happens is there does try to be some remediation in that regard. So the people who had all their stakes held in Enron, for example, we tried to get some of that back. There were some clawback provisions for that, but for the most part, they were saying, look, you were a stakeholder in this organization, a stockholder in this organization, you knew the risks, you were subject to those risks. And so that's kind of the argument that's made in that situation. Now let's make a counter argument to this, or a parallel argument, not a counter argument, a parallel argument to this. If you have your data, out there that is taken, or that the custody of it is taken by an organization, should you necessarily be held liable for that information if it's misused, if it's fraudulently misused? This is one of those it depends scenarios. But what does it depend on? Well, part of it depends on if you are volunteering this information. And if you do volunteer this information, you're made aware of all the risks that are associated with volunteering this information. I said information, I meant data. Okay. So volunteering the data. So let's deal with the second argument first, and then we'll go back to the first argument. Now, does everybody know that when you go on the line and you share detail, when you share your data, you share your detail, that's being captured by the organizations you share with? So you visit a website, and then usually there's some sort of tracking that goes on the website. What is that called? Those are cookies, yes. And some organizations are very, very accountable. They're very responsible. They say, hey, we want you to be aware we're capturing information. You can opt out on how much detail we associate with it. Sometimes they'll say you can opt out of certain types of tracking, especially if it's going to be value-added tracking, like stuff that's going to say for marketing purposes or for purposes of a granular analysis. But they will try to capture necessary ones to track your activity. Some organizations don't do that. They just say, okay, by visiting that, they've got implicit consent. And that's true. By visiting a website, you're basically acknowledging implicit consent to that detail. Doesn't mean all of the data associated with it. Just means the data that's associated with you as a user visiting that. Usually that means your IP address and any information associated with that. But that's important to note that you volunteer that detail. And so you should be acknowledging the risks associated with that. Is that always the case that when your data is captured that you're a knowing participant of it? Not necessarily, not necessarily. We've got a couple of examples that we know that that's not the case. So first of all, let's go back to the Target data breach from last week. Okay. When they tried to, this is something we didn't talk about last week, but it's something that's very relevant. When they were trying to remediate the problem, they sent out an email to basically people on lists saying, okay, we want to make you aware that we've got security provisions put in place so that you can actually sign up for security at no cost. It's going to be available to you, which sounds really good, right? What was the big problem with that email that was sent out according to the case? Does anybody remember? Yeah, it was sent out to non-target customers. How did that happen? So people showed up and they said, I saw the email and said, how did I get this? I don't ever shop at Target. And it's part of a larger mailing list. So people who don't necessarily shop at Target has access to their detail, to their data. So that's certainly an argument for like that data is being held in custody of organizations that we're not aware of. There's another one which you may remember back from AIS. I know we all talked about it, but does everybody remember Cambridge Analytica from AIS? We talked about this in the big data section. Cambridge Analytica was responsible for Facebook profiling. They actually asked for permission of the user accounts, but by assigning permission, you weren't just assigning permission for your account, but all of your friends' account as well. So yeah, is anybody friends with other people on social media in this room? Keep in mind that if they gave permission, then basically they get access to it. So Cole, if Troy Act says that he is going to give permission, then your account's being accessed by that. I'm assuming you guys are friends. Yeah. Never mind. My apologies. You guys are always sitting together. Maybe it's just an adversarial relationship. Okay. So yeah, that's certainly problematic as well. Data could be out there and you never gave any implicit permission to use that data. So there's a possibility that data can be misused without the consent of the owner. Is that an argument for saying that fraudulent use of the data should be punished more severely? I think that there's an argument for that. Okay. I think there's an argument for that because when you're willing to take on a risk, then the misuse of the assets you associate with that risk, you're acknowledging that risk. But if you are never acknowledging any risk whatsoever because you assume that the data is not going to be shown or exposed, then that's just something that you're unfortunately subject to. And so, yeah, it's certainly problematic. Again, very niche case scenario. I realize that, but it's something we do need to acknowledge and be aware of. All right, so CPA Journal article mentions that our organizations responsible for data will differ depending on the size of the organization. The implication is data management is easier or harder for small or large organizations. In contrast, what might be the advantages to the large organizations have over small organizations with respect to data management? So first of all, can we agree that larger organizations are going to be exposed to more risk than smaller organizations with respect to data management and data governance? I think that's an intuitive statement. The contradiction to this is I wanted to say, what is the arguments that say that, that there may be some benefit for large organizations over small organizations? So Clayton, what's your group say on this one?
First one is that large organizations may have a pretty robust pre-existing data structure in their company. So incorporating more data into their company is not necessarily going to be as difficult as trying to start a whole new data framework from scratch. The other example that we use is that large organizations probably have stronger security and anti-malware presence in their systems. Like small organizations may not have the resources or ability to invest in the security measures regarding their data in their company. So large organizations, presumably, not all the time, but presumably would be able to have better security.
Yeah. So I think that both of those arguments kind of underlie the core premise that large organizations usually have stronger infrastructure in this area. And I would agree with that statement. That was kind of what I was leading to in the question. A lot of leading questions in this one, but leading the idea of large organizations. Now, if we think about the prototypical small organization, the one that I like to refer to, Greek Corner Euros down the street, okay? What do we think their data governance structure looks like at Greek Corner Euros? If I want to run in and say, okay, could you go run through the BARC framework for me and talk about how you've mapped your data according to this framework? They would look at me and says, BARC, what do you mean, like a dog? Yeah, so they would not know exactly what I was talking about. Now, there's an argument saying that this is probably not a relevant point because they're probably not going to be subject to a violation of data. They even make an argument about don't use credit cards at our store. We will charge you money if you use credit cards at our restaurant because they don't want to pay those fees. So Has anybody ever used a credit card over at Greek Cornelius? They charge like $1 to do that, okay? Which is why I was carrying cash on me for a long time because I ate there all the time. So yeah, certainly. By the way, that's really clever too, because you know, if I'm going to make a trade off of that 5% cash back on my credit card purchases, they should get in on that. Okay, so yeah, yeah, use their credit cards, which I realize that most people operate off credit cards and electronic payments nowadays, and they say, well, Dr. Barnes is just more convenient. Says yes, but there's a cost associated with that. The question is whether the cost goes to you or to the people who are doing the sales. This is an argument that we probably should not go to that rabbit hole because then we could spend a lot of time on that. But let's go ahead and move on. So yeah, they don't have a big data profile. But what happens if all of a sudden somebody came into Kirksville and says, I really want to buy this restaurant and expand out. This is a great concept, kind of a greasy spoon type establishment that provides traditional Greek food along with traditional American food. And expands it out to all of Northeast Missouri. So they use the same corporate structure. Now it's not no longer a small organization, but kind of a middle, small, medium-sized organization. But they don't have the infrastructure in place to be able to deal with this problem, but they're more exposed to the problem. Is that an issue? Yeah. And I think that with respect to growth of organization, this is going to be a real issue, especially as organizations grow, they become more subject to these risks. So there's certainly an argument for saying that large organizations are going to be more exposed, but small organizations have a bigger threat, especially if they're growing organizations, because they are eventually going to have to put this infrastructure in place with the additional cost. So next question relates to agile methodology principles. Now, you may say, why did we even bother with this? This sounds so boring. The answer is this is on the CPA exam. They actually talk about agile methodology. And so I didn't want to spend a lot of time on this, but I do think that's an important one to talk about. So let's go ahead and talk really quickly about this. I think this is in the exhibit in the CPA exam article, the agile methodology principles. I apologize for scrolling. I realize that's really, really annoying to do when you're looking at something. So here are the agile methodology principles. My question was, which of these do you think are the most intuitive and which of these things you think are least intuitive? So this is more of an opinion perspective. And by the way, there's no right or wrong answer here. So again, it depends is a perfectly viable answer, but I did want you to try to narrow some of these down. So let's go ahead and go to Jack. What did your group say on this one?
I read all the ones that I said were intuitive. I'll just read a few of them and then I'll read all of the ones that I said were unintuitive in our opinion.
Okay.
Each iteration should increase, and these are the intuitive ones.
Mhm.
Each iteration should increase value as learning occurs. The focus is on creating immediate value. The initiative should align with the overall goals of the business. Those all seem to very distinct as value creation, kind of the whole point.
I would agree with that.
The ones that were less obvious were freedom to fail is considered learning what to do or not to do. We had to look closer at this one, like understand it, came to the conclusion that it's okay to fail because it teaches you how to better approach an issue in the future. The other one that we thought was less intuitive was the backlog of future development initiatives is prioritized by their importance to those goals, which is kind of hard to understand what that was saying first, but just saying that an organization should just rank their projects they want to approach based on how important they think they will be.
Good. All right. Yeah, I would concur with that. I think that if we went through all 5 groups, we'd have 5 different perspectives on this. But I do want to talk about 2 of those because I do think that there's something, and technically it's going to be 3 because we're going to focus on a word. But some areas that were kind of area disparity, and you may find this intuitive or not intuitive, but it's an interesting position. So the first one I'll talk about is one to talk about this idea of iterations. All right. Now, is everybody familiar with the term iterations? Basically, it's kind of this iteration basically just means a sequence of steps. And they talked about 2 different principles with respect to iteration. It says works performed in iterations and each iteration increases value. Now, from a day-to-day life perspective, the things that you do as a Truman State student, would you say that that's a sensible series of statements based on what you do here at Truman State? So do you perform work in iterations here at Truman State? Yeah. So when you're learning something, basically you don't throw in all of the content at once and say, all right, here you go, best of luck. You know, we do a gradual process and say, here's the basics. Okay. Here's the development points. Here's kind of the expanded framework. You start with the simple stuff and then you expand upon that. So you iterate on every single step that you take. And it's going to be very true in the undergraduate program. The graduate program, you're doing the highest level of iterations. But the whole goal is that you do the simple work first, you add more complex work as you move on, and then you do the most complex work at the end. And then think about what that means. It means you've got to have the understanding of the base framework first. So you basically have to get that information. That information is going to be valuable to you when you start doing the more advanced stuff later on. So the idea is every single step should be followed, and then each step is going to provide incremental value as we move through. So whether that's intuitive or non-intuitive, I think it's intuitive because it's something that we're familiar with, but it's not intuitive because we don't think of iterations as a natural process. You don't wake up in the morning and says, what iterations am I going to accomplish today? All right. At least I assume you don't. If you do, kudos to you, okay, for being technical. And then the other one I want to talk about is so the idea that failure equals learning. So is that something that we really think about? I mean, most of us in this room are just like, I don't want to make a mistake. I don't want to say something wrong in class because then I'll look silly. Okay. That's one reason why why I don't do the Socratic method anymore in most of my classes. But we do kind of a moderate Socratic method, but it's a lot of heavy research. Like Dr. Alan Davis, the one that I like to tease about and make fun of, he was notorious for doing cold calling in his class. Okay. He would just basically call out students and say, all right, what is your think about this? A lot of thought about this. What do you think about it? What's your perspective? And he was dispassionate. He didn't mean it to be rude, but I think some people thought it to be rude, is that if they were right, then he would say, that's correct. And he would move on with the discussion. It's like, if they were wrong, he says, no, that's not right. Then he would explain what the difference was. All right. Given volunteers, how many people are going to volunteer to be that environment saying, okay, I'm going to answer these questions, especially if they're really difficult questions? No, because we don't want to be exposed as making mistakes. Is it important to make mistakes? Yes, because that's how we learn. All right. Imagine when you were a kid, how did you learn that the oven was hot? So because your parents told you it's oven's hot, don't touch. Okay. How many people actually never touched a hot oven after that? All right. Okay. You liar. Yeah. So yeah, I'm sure that everybody in this room has burned themselves at least once. If you're like me, you've done it multiple times. Like, okay, I've forgotten what it like to have burned my finger. Ow, that sucks. Okay. Yeah. So that's kind of how we learn, is that we make mistakes and we say we're going to learn from that process. Of course, the key is that if you make a mistake, don't learn from the process and make the same mistake again. All right. I will say that I've done that a few times too, and that's not a helpful process. But this is telling us that the goal of making mistakes is to learn from it. So we are going to make mistakes and going to learn, which is a very enlightened perspective. I think that's a very valuable one to put in this agile methodology. All right, running out of time. Let's go ahead and move on. According to the CIO article, how is data governance defined? Go back to Joe. Joe, you had a good definition earlier. I'm counting on you for this one as well.
We said data governance is a system to define who within an organization has authority and control over data assets, how these assets may be used. It encompasses people, processes, and technologies required to manage and protect data assets.
Good. So I think that there's it's a very broad context, is just kind of like the kind of the planning and oversight over data and data or data related sources. There's a bunch of different perspectives we could take on this, but this is kind of just like the overarching view of data and what's going on with it. Now, this is an interesting question, is what is the difference between data management and data governance? And I'm going to stick with you, Joe, on this one. So what does your group say on this one?
Data management is the overarching term that describes the processes used to plan, specify, enable, create, acquire, retain, use, archive, retrieve, control, and purge data, and data governance is one part of the data management, focusing on roles, responsibilities, and processes.
Right. So data management is kind of like the big picture perspective. It's basically at the top saying, here's data, here's everything that we need to be responsible for with respect to the data. Data governance is more along the lines, okay, we now know what the responsibilities are, who's responsible for those items. So it's pinpointing specific responsibilities related to these areas of data management. And it's important to note because data management and data governance sound like they could be synonymous. And I would say that there's a significant degree of overlap, but as Joe pointed out, data governance is a subset of data management, is kind of the important takeaway. I did say that right. Data governance is a subset of data management. Okay, yes, okay. I was really worried about transposing those terms and then causing a lot of confusion. So make sure I got that one right. All right. So moving on, this one's a little bit more subjective, but I do think that there's an interesting takeaway on this one. What is the single overarching goal of data governance? Jake, what did your group say on this one?
You said the goal is to establish the methods, responsibilities, and process to standardize, integrate, and protect corporate data. According to Mark, an organization's key goals should be minimize risk, establish internal use and compliance requirements, improve internal and external communication, et cetera. Increase the value of data, facilitate administration, but reduce costs, all that.
Okay, so yeah, there's a list on the screen as kind of the list of BARC, and I was a little bit proactive in this one. In previous semesters, I've had to scroll and try to find it, and I always take like a few seconds to find it. But I stayed on this particular screen because I didn't want that to happen. But yeah, the BARC the BARC key organizational goals listed here. Now, this is kind of a bad question. I recognize that, but I promise there's going to be a takeaway from this. So how do these goals compare to the key aspects of information ISMS? And we talked a little bit about that on Monday. What were the key aspects? So what are those three key aspects again? Easy question for you, Andrew. What are the three key aspects of an ISMS? Had to do with three letters, C, I, and A.
Oh, confidentiality, integrity, and,
Availability? You got it. All right. Well done. So the CIA triad, which we talked about very directly in week 6, we alluded to in week 2, but I talked a little bit about it on Monday, kind of allusion to that. So information security management system has a very specific focus, whereas we talk about the BARC goals tend to be a little bit more broad. And we know this because there's a key word in ISMS that's kind of the anchor word. What is of the 4 words that make up the acronym ISMS, which one do you think is the most important? This is not specifically for Andrew, but for anyone who wants to volunteer that information. Security, yes, security is kind of the important focus of the ISMS, which we talked about, which means that information probably has the overarching goal of making sure it's secure. Now, you're probably saying there, Dr. Barnes, that's not fair because we've talked about multiple governance systems for information technology. We didn't just talk about ISMS, we talked about ITIL, we talked about COBIT, even COSO has some representatives there. And I would say that's fair, okay? That's fair. So why did I bring up specifically ISMS if there's multiple different frameworks that we talked about with respect to BARC? And the answer is, I could bring up any of these. I could talk about any of these individual frameworks, and they would only compose a subset of each of these goals of governance. So if we talked about COBIT would be focused on value. If we talk about ITIL would be about service. If we talk about COSO would be more about general controls, okay, general controls infrastructure. So all of these are kind of contained within the BARC infrastructure, which alludes to this idea that data, while really, really important to be able to govern, we need to have one set of factors that kind of tie this all together for data governance. So that's kind of the goal of BARC, is to take all the things that we've already talked about with information and constrain them within one set of standards, which I think we could actually look at this and say all of these standards kind of relate to things we've talked about with information technology governance already. So data governance, not nearly as many standards related to this, but still the same philosophies and same concepts that we've already talked about in other areas. Okay, last question, probably a fun question here, okay? So what are the 3 common roles within data governance? We're off to Clayton. What are they? Okay, steering committee, data owners, and data stewards. Okay, and they had some definitions about that, but we're not going to go too much in detail on that. But steering committee is kind of like an oversight mechanism that goes into how data is used, and data owner is basically the person who manages the data on it, data and the holding of that, and the data steward is the one that does the day-to-day operations with the data. Now, that's fascinating and all, but this relates very closely to something that we've talked about in another class. And I heard some arguments about this. I heard some people say, Dr. Barnes really likes COSO. Maybe he's talking about COSO. I'm not talking about COSO, okay? What was the concept that we talked about in 417? And it's very interesting because I asked this question in my online class, and then I realized 2 of my students didn't take 417 with me, didn't take auditing, but they still got the question right, which is impressive. So what are these concepts that we talk about? Jack, what is the concept that we talked about in 417 that relates to this? You're absolutely right. Segregation of duties. Okay. So yeah, this idea of custody, authorization, recording. Which one's custody? Which one's authorization? Which one's recording?
The steering committee was authorization.
I'd agree.
We said data owner is custody,
Yep.
and we said steward is recording.
Good. And I think that the definitions kind of pair that out. Is there a problem with that analogy? This is more of a general question. I'm not trying to pick on Jack. I like picking on Jack, but I'm not trying to on this particular scenario. So is there a problem with that analogy? So who are two of the parties that are part of the steering committee? I'll give you hints, the other two parties. It's the data steward and the data owner are part of the steering committee. Now think about this logically. If we talked about this as an authorization function, we said the person who's responsible for authorization also has ownership or also has recording or has custody or has recording. Would we immediately scream violation? Yeah. So how do we actually rationalize this as say from a perspective, organizational perspective, saying that people who have recording and custody responsibilities can also be on the authorization committee? So there's a couple of different ways we could look at this. The first one could say the committee is not all powerful. It's because it's multiple individuals. There are still people who only have the authorization responsibility. And so the authorization will make the best interest, even though there may be influence of people who are have custody or recording. So that's a first argument. Second argument is probably a more basic one. This is a bad analogy. Okay. May argue, say the same rules that we talk about with custody of, talk about segregation of duties are not effective from an organizational perspective of data management or data governance. Data governance is far more broad than just simple segregation of duties. So which one do we want to say is probably the correct one? The answer is it depends. All right. It really depends on what perspective we want to take. I'm not going to make you make a judgment on that, but I do think that it's important to note that this does very closely emulate this idea of segregation of duties, but it's not a perfect analogy, unfortunately. With that, we're done. I'll see you all on Friday.